Good morning, everybody, and welcome to this National Investment Landscape Forum. My name's Philip Hargreaves, and I head up the Access to Finance team here at the Business Growth Hub in Manchester. I'll be your host, question master, and perhaps even referee for the next 45 minutes. We've certainly got an exciting panel with us today, and shortly I'm going to ask each one of them to introduce themselves, say a bit about their organisation, and maybe a few words about their links to the creative industries sector. Of course, I've got some preset questions for our panel just to get the ball rolling, but there is nothing better, I think, than to get live audience participation. So if you've got any burning questions and would like to ask our panel to respond to them, then please drop them in the chat box and I'll endeavour to pick them up and ask questions on your behalf. So please do make good use of this great panel we've got before us today. So over to the panel. Irene Graham, OBE, Chief Executive Officer of the Scale Up Institute. Could you introduce yourself and say a few words about your organisation?
Thanks. Delighted to be with you all this morning. It's terrific to be present at this festival, and what a festival to celebrate creativity, because creativity is across all aspects of our economy. The Scale Up Institute is what it says on the tin. Actually, we were formed around 6 years ago to make sure the UK becomes the best place in the world to not just start but scale a business, and make sure we address that, working with the private, the public and the education environment. My links to the creative sector are I sit on a couple of boards. I'm on the board of Creative UK. I'm on the Access to Finance group for the Creative Industry Council, and very, very importantly, and delighted to be working with the Manchester team, the West Midlands and the West of England on this very, very important scale-up programme for the creative sector in terms of getting businesses ready for investment, as well as getting more investors into the creative sector. So looking forward to the discussion today, and great to see you all.
Great. Next to Mark Lyons, Director of Patura Ventures. Mark's having some trouble, I think, with his video, so we've just got sound at the moment.
Apologies for the technical issue. Good morning, sorry, everybody. I'm a director, as Philip said, at Patura Ventures, a venture capital business headquartered in Manchester. We support early stage businesses with equity funding, and support them with additional resource to help them scale through the challenges of the maturity of businesses. We tend to invest between £1 to £3 million as a first check size. My links to the creative sector are that I sit on two boards within that space. Firstly, a virtual reality gaming studio based in Leeds called XR Games. And secondly, recently we've invested in a company in Manchester called Pixel Max, which is an immersive communications platform, which is doing some really exciting space involving augmented reality, taking events like this into a new stratosphere.
Excellent. Thank you, Mark. Mejabeen Patrick, I think you're back with us now. Mejabeen is the Chief Finance and Investment Officer at Creative England.
Hi. Thanks, Phillips, and sorry for that tech glitch. Yeah, as you said, I'm the Chief Finance and Investment Officer here at Creative England and Creative Industries Federation. Creative England and Creative Industries Federation are a group of companies that have come together over a year ago to sort of support the creative sector. As the word says, we are a specialist investor in the creative sector. So we are all about creative sector in the UK. We have been investing in creative businesses and creative talent for a very long time now, since the inception of Creative England in 2010. We have since 2012 we have been investing sort of loans and making equity investment into creative businesses through our regional growth funds, and that has really led us to be a specialist investor in creative businesses in this sector. Currently, we are running a venture debt fund for the creative companies who are looking for loans to grow and scale. It's a £25 million fund with a check size of about £500,000. And we also have an equity fund. We are an equity portfolio of about 40 businesses and doing small investment into equity portfolio. As a company, Creative England and Creative Industries Federation have quite a wide footprint when it comes to supporting the creative sector. Investment is one part of our activity. We do quite a lot of business support, investment readiness, journal sort of networking and business support for creative sector, and as well as a lot of work around the advocacy policy and sort of supporting the sector for making sure the voice of the sector is heard both within the industry but to government as well. We have quite a lot of range of programs and sort of initiatives up in the north. We are very shortly launching a new fund for the North Tyne area, a £2.5 million investment fund for creative businesses. We have a few business support programs for the north of the country, and our creative growth finance venture debt fund is very active in north and have quite a lot of some amazing businesses in our portfolio coming from that part of the region. And I'm really excited to share more of what we do and how we support businesses later on.
Well, that's really interesting, Meshbeen. Thank you very much for that introduction. And last but certainly not least, our own Jess Jackson, who is Head of Investments at GC Angels in Manchester.
Thanks, Phil. Good morning, everybody. As Phil said, I head up GC Angels. So we're a specialist early stage investor. We're anchored here in Greater Manchester and we're publicly backed. So we invest public funding to stimulate the early stage investment landscape on a co-investment basis. So we invest anywhere sort of between 50k up to 150k, leveraging angel investment, early stage funds, grant funding, you name it, we've co-invested with it. So we've got a portfolio of 30 businesses that sort of span the really broad digital, creative and technology sectors. Our involvement with the creative industry sector has been primarily through the Creative Scale Up program, which began a couple of years ago. We ran some educational events actually aimed at our investor network about upskilling them in how to assess creative opportunities. And also educating founders in how to make themselves investor ready, how to communicate with investors and how to make themselves, the most investable opportunities possible. In our portfolio, we've actually got a really strong presence from AR, VR, sort of the immersive digital marketplaces angle specifically when it comes to creative. We've got a couple of businesses that I sit on the boards on. So we have a digital content business called By Gamers for Gamers, which services gaming right across sort of computing. Esports is a new area for them that's coming up. So that's a really exciting and growing business here in Manchester. And it's growing very aggressively with some great job opportunities there. So for anyone who maybe looking for their next creative role, please go check them out. We're also on the board of Twine, which is a marketplace for creative freelancers. So bit of a different example of the businesses that we're on the boards of.
Thank you very much, Jess. That's comprehensive and very interesting. We know obviously from our own knowledge that the creative sector often to access the funding and finance that it needs to grow. I know never more so has that been a problem, I would guess, during the COVID pandemic in 2020. But what do you think, Jess? I'll come to you first. What do you think the investment landscape might look like in 2021 and early 2022 compared to 2020? Do you see any positives coming out of the market at the moment?
Yeah, absolutely. So, I mean, speaking sort of as a whole, I was looking at the Bowhurst report from Q1, which is obviously January to March. And we usually expect buoyancy in Q1 anyway, because it's before the tax cutoff. So you see a little bit of a flurry of EIS and SEIS opportunities and deals going through. It, by all accounts, it appears to be a record-breaking quarter for deals of all stages. So what that tells us is the market's really kind of bounced back, and there's more of a demand for finance than ever. But that also does mean that more deals are going through, which is great. I was also really pleased to see that female-founded companies are securing more money than normal. But when you look at that compared with the growth seen by all male-founding teams, it's still not what I would like to see. That's about 22 pence for every pound, but that is across all growth stages. And I think, going forward, I'd like to see that maintained. I think, anecdotally, we're seeing it feels as if more people are raising SEIS and EIS funds that are either addressing kind of underserviced groups traditionally by other financial products. So with a diversity angle to it, or indeed with a more, a sector specific angle, which I think is really positive, because it gives kind of businesses really clear places that they could go to discuss investment. So I think, it looks as if the trajectory is very good. And I think it's a very good time for businesses seeking finance. That said, only 14% of the deals were in the north. And having looked at kind of the numbers myself the other day for Manchester, I think we do dominate in the north in terms of the number of deals. So there were 52 deals in the northwest in Q1, and I think about 40 of those were from Manchester. So we're not quite registering the heady heights of London in the southeast, but overall the market looks very buoyant.
And Mark, do you see the same activity levels and the same positivity with Protura?
Yeah, absolutely, and I agree with what Jess said, that there has been a strong first quarter of 2021. We've seen it ourselves here. We closed 7 or 8 deals in the first quarter of 2021. Perhaps a bit of a knock-on or pent-up demand from the lack of activity in 2020. Obviously, we all know what happened at the end of March. We very much went from investment activity to supporting our portfolios. So we put everybody from the investment team to support the portfolio activity, looking at cash saving initiatives, fundraising, reforecasting, HR matters. Probably did that for the best part of 6 months as we went through such unprecedented times, and then refocused back on understanding that this is the new norm, for want of a better term, and we had to accept that we couldn't always meet new founders that we were looking to invest in face to face. We rely on video technology and started to accelerate new investment opportunities, which we closed a number of those, as said, in Q1 2021. I think looking at the landscape now, it's probably better than it was pre-pandemic, in the sense that COVID has accelerated the drive to the north. Obviously, a lot of people have taken the opportunity to relocate. We always believed in the north and the infrastructure that sits behind it. The philosophy behind Protura Ventures being set up and headquartered in Manchester was to provide capital and support to early stage businesses in the north, which we believe was and is still lacking, and we want to be a key component in that. We know that the skill set exists in the region. There's obviously lower living costs, and we believe that founding and growing a business in the north makes a lot of sense. So we're going to continue to bang that drum. About 3/4 of the investments that we've done have been in the north, and we believe that will continue going forward.
Okay, thanks, Mark. Mehjabeen, obviously you've made comment about some of the great new initiatives that you've got coming forward for the north. What do you see the landscape as like in 2021-22?
Absolutely. I think I will agree with Mark and Jess. Really, the landscape looks really good, actually, very, very encouraging. And I think I just sort of stepping back a bit, there are 2 reasons why the landscape is looking good. One is, of course, the creative sector was always very attractive, and there were lots of opportunities, good opportunities for growth in creative sector. But it has really come to its own in this sort of during the pandemic, and the opportunities that are coming forward. So I'm sure we'll discuss later in the session the trends and where really the sort of opportunities lie. So that is one reason there's sort of the outlook is promising, that there are a lot of good opportunities within the creative sector to invest. But on the flip side of the coin is there's a lot of cash in the market. There's a lot of capital in the market. We know during the COVID, the market has been flooded by loans, as we know, that there's so much sort of C-bills and bounce back, and now the recovery loan fund that has been announced. So there's a lot of that sort of capital in the market for creative businesses, and it is a good time to really use that to sort of bring cash into the business, and there's increasingly bit more activity happening on the equity side, the lower sort of EIS, SES sort of money. But I would say there's still a gap of sort of more risk finance within that needs to sort of come into the sector, where we're talking levels of sort of 250 to $1 million, where there's still, I feel there's still a bit of a gap, and more sort of funds need to really support that part of the sector. Now, I think I see a mixed picture as well when it comes to that. There are certain parts of the creative sector where the money is flooding in. So if you look at content, for example, over the last 12 months, 18 months, more and more funds, they were already sort of lots of money going into that space, but more funds are coming in. So those who have the sort of skill and the capacity to attract that money are really, the next few months and years are looking good for them. But there's a whole sort of group of talented businesses and individuals in some of those subsectors that are still finding it hard to really access that funds. So there is a mixed picture. There is a lot of capital in the market. The outlook is looking good, but there are certain sort of groups and certain level of risk that is not perhaps as much covered as it can be.
And I guess it's because there's such a diverse group of subsectors within this overall sector, isn't it? And they each have their own issues and problems, I guess, in many ways. Irene, welcome back. We lost you for a minute or two.
Wi-Fi issues as ever. Thanks very much. Look, let me give a broad perspective. I mean, I agree with what Jess and Mark and Mej have said, but let me sort of look at it from that perspective. We looked at this last year, and we think there's around across the country a £15 billion gap yearly in growth capital, all the stages of growth capital. And we think in the north that's around 3 billion, 2 billion in the northwest, about 1 billion in Yorkshire. So we're very focused on how we close that growth capital gap across from angels right through to that follow-on funding. And we've been working hard with. So yes, there is good investment coming in, and particularly if you're a platform business, internet enabled, there's quite a lot of investment, also a lot coming from the international environment coming through as well. But what we want to see is a really building on all the great ingredients in the north. You've got sector and cluster, you've got the northern powerhouse, you've got what the growth company is doing, and private investors. What we want to see is that capacity being built. So if I look at your angel groups, you've got around 7 active angel networks in the area. They're doing really great stuff, 55 deals a year, around 10.5 million of investment. We want to build that angel network. So we want to see more of individuals who are passionate about the creative sector. And so those of you in the audience listening, would you be an angel investor? Are you passionate enough about the creative sector? How do we get you engaged in that? How do we work with Jess and the team Then there's the follow-on funding. It's great to see Mark very active locally, but how do we build out further capacity in that follow-on venture capital? And then, very importantly, working with the government, how do we get the institutional investors in and build up further the Northern Powerhouse Fund? So how do we raise those opportunities? So there's a lot of good ingredients now. Capacity and get it to the creative sector is going to be really important, and that's what we're very focused on at the minute, working with yourselves, working with the investor base, and also government, and connecting those investors into the creative sector. Lots of different dynamics to the creative sector. You've said it as well, Philip. If you're a platform business, a gaming business, you're going to attract that capital. If you're more in something you may have a harder time, and that's what we've got to close.
I'm going to segue into a couple of questions that have come through. It might seem a little bit disjointed, but I said at the start I wanted to have audience participation in this and make sure we respond to questions which come through. So I don't know if you guys can see this question, but it says, how can we encourage smaller businesses, young startups and pre-starts to think more creatively about access to wider routes of finance and investment rather than just that traditionally, where's the free money? Where's the grant funding? Medjabeen, can I come to you to maybe pick that up first of all?
Definitely. I think that's a really good point. There's, creative sector is full of freelancers. We rely on freelancers. We rely on individual talented people who are entrepreneurs more than any other sector. So therefore, encouraging small businesses, encouraging individuals to start an enterprise is so important. And absolutely, there's, traditionally some parts of the sector have relied on grants, and have relied on that sort of, free money. But I think that things are changing. We know that public finances are not going to be the same as they have been for a while. I know during the pandemic, we saw more public money being pumped into it, but things are going to get harder. So finding routes to sort of cash that is commercial and can help those who want to start their own business on that journey is really important. I think there are quite a lot of initiatives out there that are doing that. I'm sure other panelists will be able to add to what I know of. But we ourselves, Creative England, are in sort of a week's time launching a specialist startup loan sort of initiative for creative sector. So this is the startup loan scheme, which has been in the market for a very long time. But all the data and all the sort of evidence that has come back from those who are delivering those programs is that creative sector has not been using that facility as well as they can and as well as they should, considering that it is a sector with most small businesses. So we are starting up a specialist a pilot really for startup loans, especially focusing on creative sector, loans of up to £25,000 for someone to start a new business or a business that has been going on for 24 months. So that is a really good source of sort of money for entrepreneurs or freelancers or small businesses to really get going. There are other avenues. Innovate UK, I know, have quite a lot of sort of various pots of money that can be accessed. I know innovation is an angle there, which sort of needs to be focused on, but there's money there. I think other than in terms of small amounts of monies, I think the banks and the peer-to-peer lending we know is also quite useful for that startup capital, and sort of crowdfunding, as we all know, all of those are quite a good avenue. So there is money available. Us here at Creative England are especially sort of focused on creative businesses. So please do come and see us, and we've got some funds to sort of get that startup capital into the market.
That's really interesting, Medjabeen. It's interesting to see that you're getting a specific startup loan program as well. And just to confirm that is, I think, £25,000 per director. So technically, companies with 2 or 3 directors can access a larger slice of that cake as well. So we'll look forward to seeing that. Jess, what's your view? I mean, obviously coming from the world of the public sector to some degree, how does it look from your perspective?
Yeah, so I was just reflecting on this as Mej was talking, and she's absolutely right about kind of that broader awareness of product. But the way that I kind of come about this, and I work with, and have conversations with lots of entrepreneurs who are kind of like at the stage of like, oh, I'm kind of thinking about doing this, or, I want to have a conversation about equity, and you're like, great, yeah, let's book some time in. Can you send me your deck? And the conversation, well, actually, it's not. I've not sort of built that yet. So it feels like there's a desire to kind of engage and learn about, equity and what it can do, but perhaps founders aren't tapping into lots of the existing routes to firstly just bolster their network and bolster their understanding of these things. And I'm a very, very friendly investor. So I will sit with people and say, well, this is what this is, and here's what you can do. But, sometimes a lot of the investors out there, I mean, they just don't have the time to do that. And it's not their role necessarily. They're just there to sort of be like, yes, I need to deploy this funding into investor ready businesses. So there's always going to be an education gap. So I would encourage businesses to really look at who they've got around them. So as I think Irene was sort of saying, there's a lot of kind of freelancers and they've worked on their own, ran their businesses incredibly successfly, but actually it's taking a step back and thinking, okay, who else can help me to grow this business? Who is in my advisor pool? Who is on my board? Who's in my peer network that I can share learnings, gripes, opportunities with? Who is it that I can talk to, to actually understand what potential my business has in the future, and actually sometimes thinking about the possibilities like in years to come is really hard to do when you're down in the detail of running your business. So my advice would be to sort of engage with accelerator programs, and use all of the tools that they will make available to you in terms of growth mentors, the peer networking, pitch practice, investment readiness, and really, just turbocharge who you're talking to and broaden those viewpoints, because only in doing that can you really understand where you want to go and what you need to get there. And then that can often be the hardest bit, but then you can begin that journey in earnest.
So thanks, Jess. I'm going to bring Irene into this bit, but just add in another question that's come through, Irene. It probably stitches into this quite well. So the question is, where do entrepreneurs start when looking for support, as there seems to be lots of programs around, but difficult to navigate the ecosystem? So I think we can all have a response on this, but Irene, if you want to start and say a little bit about that ecosystem.
Yeah, absolutely, and totally relate to that. That's what constantly we're told. So a couple of things. I think firstly, you've got the ability to something that you may not know exists locally, but it's called a growth hub. It was talked about in the slightly earlier session, and it operates in all localities of the of England. And in Manchester, that's the growth company, and they can hand you off also to others. But you've got that locality. And they have some good experts who are able to hand you off to the relevant private and public sector opportunities that exist. Also in the creative program operating in Greater Manchester. So again, look at the growth company for that. And you've got Creative England operating there in Mej. So you've got two very good entities who can help you directly, but also signpost you on to others. So, I mean, those are two. Creative England in Manchester, they will sign off to others. Just picking up the points that Jess and Mej have made, though, getting at the right mentor in networks, looking at role models, participating in activities like this, really, really important. It gets you another that you can get connected to. I never think it's too early in the journey to at least start to look at different options for finance, and get connected to some of the finance Jess that can give you some background to that, or some of the investment readiness programs like the creative sector program that's running at the moment and what Creative England do. I think those are all important factors. If you're looking at scaling up, we have got a scale up support finder, so we'll post that out to everyone, and that does give you, what's actually really good for me on a growth journey, not my startup journey, but my growth journey. And the British Business Bank has got a great finance hub for looking at what are the different types of finance. So some things that I would just recommend you're looking at there.
Mark, I'm not sure. Have you got anything to add from a VC perspective, or would you like me to move on?
Sorry, the panel have probably covered most of the points. The only thing I'd say from a VC who looks at it from a different perspective, i.e. later in the journey, is just be mindful of what you take on board early days. So who is your equity investor, or what kind of loan capital are you taking on? Because accelerate 2-3 years into the future when if and when you're looking for venture funding, that will come under the microscope. So just don't take the easiest or the first route to capital. Really consider that, because it can have implications going forward in terms of the partners you take on or the dilution effect you take at a very early stage of a business.
Sure. Here's a question. It's often said that funders and financiers lack understanding of the creative sector. Is that true? And if it is, how do we remedy that? I'm going to ask you, Irene, to come in on this one first of all, because you're nodding frantically at me.
I'm nodding because we've worked very closely with investors across the country in this last year, with yourselves as well, understanding of the creative sector, and frankly the investor community will agree it's a very disparate sector, lots of different subsectors to it, and getting a handle on the sector is something that they want to learn more about, and that's why Minister mentioned it, with UKBAA and working with yourselves and our colleagues in other regions, have created this investor toolkit that will be becoming active in the coming weeks to really get investors able to understand just the sheer economic creative sector has. And let's remember, the creative sector isn't just about what the company does. It's our creative sector is across every single sector of this economy. It doesn't matter if you're in automotive, manufacturing, health, retail. You need someone to draw the packaging that you might have, or engage in the team management with you, and that comes from our creative sector. So investors recognize that. That's why we're doing this investor education. The other side that investors would to businesses is, and it picks up a bit of Jess's point, look, get yourself investor ready. Make sure you know what your commercial proposition is, where your market, and think about the scalability of your business, because that's what investors want to understand, the customer proposition, the marketplace, and that you've got the impetus to scale that business. So we do need to educate and build the knowledge base, and the investor community recognise that, and the connectivity, and at the same time work with the businesses on getting that investor readiness in the right place.
Okay, Meshabeen, have you got something to add?
I do. I totally agree with everything Irene said, and going back to the comment, it absolutely is true that majority of the traditional investors do not really get the creative sector, and we as investor claim and hopefully have proven with our work that we are specialist creative sector investors, and we absolutely understand the problems and barriers and opportunities within the creative sector, and we sort of pride on being from within the sector. So Creative England as an investor have grown from its work within the sector for over many years, many decades, and we are one of the very few investors, if not the only one, who really are from the sector and therefore understand the creative sector. So we can claim that as on the investor side. But just picking up on Irene's point, I think the sector is very fragmented, and however work sort of we do with the investors, there's always more to do to really make them understand the sector and really see what's going on and see the opportunities. And also, sector is so constantly evolving and growing, and more opportunities are coming to the forefront. As we've seen over the last 12 to 18 months, creative sector has come on its own, and so many new innovative things and new models of making money, or new models of really sort of distributing content, for example, just as an example, are coming forward. So for investors to really get their head around all of that is not easy. And even when there's a will, there needs to be some support for those investors to really understand what is happening within this very diverse, very, to some extent, fragmented sector, and really grasp that opportunity. And we at Creative England, as the DCMS Scale-up the Creative Business Support Program, we have done quite a lot of work with investors ourselves, with UKBA and Scale-up Institute, to really shine a light on some individual subsectors, and we have really found investors engage quite a lot more if you really break the sector down. Because when you're talking about creative sector and opportunities, you're not doing justice to the challenges and opportunities within the subsector. So breaking it down and presenting it as those individual sort of subsectors really helps in investors engaging more and really finding more interest within it.
Okay, thanks, Benjamin. We've got a few minutes left. Jess, you've already made a comment, I think, a short while ago about investment readiness and the need for businesses to make sure they are investment ready. Just want to say a bit more about investment readiness and why that's important, and how businesses can go about making sure they are ready for investment.
Yeah, absolutely. And I think I'll just a couple of bits just to answer the previous question as well, because I had some kind of reflections on this. When a lot of businesses are preparing themselves for investment, what they tend to do is have a look at, okay, is there anybody in my market who's made a successful exit that I could perhaps use as an example to educate my investors that I'm now approaching? And that can be really helpful, but it can also be unhelpful. So, for example, I'm going to use gaming as an example. We recently saw Roblox, which is an online gaming platform that young kids use, and I've never played on it, but that had an IPO float of $41 billion, and that was reflective of huge increase in use over the pandemic of this of the platform. It monetizes microtransactions, so I mean, it was making an absolute killing. The unhelpful thing can come in that may well be a business model that you are trying to replicate, but it doesn't necessarily mean your journey is going to be exactly like that blueprint. So that's just one thing that I would observe. And I think investors tend to link with their experience. So, they invest in a sector that they've worked in or where they made their money, or if they identify with a consumer product. So within arm's reach, I've got, a Nintendo Switch, so I can understand the power of something like gaming and how people engage with that. So, and I think, it's really important to have a specialist or a lead investor as part of a round if you're wanting to bring on people who need to sort of be educated in your opportunity. As to being investor ready, there's a whole host of amazing things that you can tap into. We've already talked about kind of the growth hubs. We've talked about accelerators and incubators. There are amazing, support you can get access to through the growth company and the access to finance team, which you obviously lead on. And we work with really closely on, if things come through to us as an investor that we think it needs some work, we'll refer it through to that pathway and work with the advisors to make sure that things are moving in the right direction. It's just really important to make sure that you've tapped into that support, to go back to my earlier point.
Sure. Thanks, Jess. We've just got about a minute left. And Mark, welcome back. I think maybe 30 seconds from everybody, just a summation of where you see the marketplace at the moment. And if you had one ask of government, maybe, or one thing that you want to put in place, what would that be? And I'll start with Mark, because we lost you earlier on.
About horrendous tech issues today. Just pick up on a point that Jess made before. I think it's really important to consider sector specialism. We're relatively generic, but we have done co-investment on creative investments alongside a VC house that does specialise in media and entertainment. And I think that's really important in terms of the network opportunities that brings. So that's one thing I'd like to stress. In terms of support, I think the government's doing a good job on the Northern Powerhouse Initiative, and long may that continue. To loop back to the earlier conversation, I think that the landscape is really strong, and we should continue to bang the drum for the North.
Major Bean, just I think probably about 10 seconds, unfortunately.
The opportunity is within the creative sector. There's so much, potential in this post-pandemic world. So I think more support for this sector in form of, whether there is business support, investment readiness, or whether there's more patient capital, more risk capital, not just from private sector, but also from more stuff in that space from government, as you asked, will be really helpful, because this sector is going to lead the recovery.
And Jess, final few thoughts from you.
Yeah, I think, we're going to see some really interesting things, I think, from the gaming and esports world. So I think keep an eye out on that. We saw some big wins from streaming platforms and so on. But I feel like there's a huge amount of stuff coming our way. Also in immersive, which kind of spans pretty much everything. So there's a huge opportunity there for all the creative, immersive digital agencies and freelancers as well. And
Irene, your final thoughts, please.
Okay, well, for the public sector, I'm going to say bow, and what I mean on what works. So scale up what exists today and really build that out, such as the creative sector programme here in the North and all the good work that is happening there across this panel. To the private sector, to the individuals out there, the creative sector is exciting, it's local, and you've got great businesses to back. So think about becoming an angel investor if you're involved in the creative sector. You don't need huge amounts of capital. Join a network, get involved, join our sessions on becoming an angel investor in the creative sector. There's a huge opportunity and vibrant businesses locally that you're going to be enabling to grow and creating the jobs for your future in the North. So that's my second message to the private sector.
Great, thank you, Irene. It just goes to show that 45 minutes is not nearly long enough to discuss these topics. I just want to say thank you to Irene, thank you to Mark, thank you to Jess, and thank you to Major Bean. It's been great. Thank you very much, and I think that's the end of the session.